Morning, everybody. It's the 7th of June. We're Signal Centre talking ball. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Good morning, mate. All right?
Yeah, good. Thank you. You?
Yes, not bad. Not bad at
Good.
all.
Lovely. Okay, let's get stuck in then. So, latest news over the weekend. The group of the 7 richest nations secured a landmark deal that could help countries collect more taxes from big companies and then also enable governments to impose levies on US tech giants. So, that's seen as quite a good thing, although it would obviously start to impact on operating profits and profits that the companies make. So whether or not they have a knock-on impact on the wider economy, we'll have to wait and see. In terms of coronavirus, it's a bit too early to say whether or not the UK will go ahead with its June 21st plans and basically end the restrictions that are in place.
Yeah.
There's a little bit of caution in place because last week Portugal was removed from the green list of countries. It was relatively easy to travel to previously, being on the green list, but now we are having to isolate on return. So I think today is the last day that people who are in Portugal have to get back before they are imposed with this quarantine. Yes. Yeah. So what else we got? Bitcoin slipped over the weekend. Elon Musk sent out a tweet by the looks of things. On Sunday, the Bitcoin and other tokens fell amid worries about further crackdowns on the industry in China. And we've also got AMC and GameStop back in favour again. There is a big push to try and get them included in the Russell 1000. An inclusion into that index could prove an issue for the two meme stocks, given that their representation in the large cap index will be much less impactful. So we're waiting to see what happens with those. All fun and games while it lasts, I guess, but there will be a few singed fingers, I would have thought, at some point.
Yeah, definitely.
Okay, so let's get stuck into some charts then. That's pretty much it on the headlines front. Steve, anything that's taken your fancy over the weekend on the chart front?
There's a couple of things towards the end of last week which I sort of thought were quite interesting. I'll start with the commodities and run through it, and we'll pick them up as we go along. For me, sort of like WTI crude futures or WTI crude oil has pushed above the is into the fifth wave. I think this is the fifth and final wave of this impulsive move higher, and potentially it's looking at levels around about $7 higher, coming in around about 76.80. So it's still a bit of a way to go. There are some intermediate resistance levels, but at the moment it's looking I can't sort of like see anything holding it back really. Just it's going to plow on. Dollar strength has had a little bit of an impact, but the dollar strength is only minimal. So yeah, I'm pretty positive on oil this week. Gold was the interesting one. Last week we posted a hanging man candle on the as we sort of like, I've redrawn this channel, and this is like the first point here, second point here, third point here, and it's got 2 points below. And the hanging man candle is a warning sign really, and we've got off to a bit of a negative start today. For me, 1890 to 93 is the resistance level. A break above there should open up an opportunity to attack last week's high, which shows on this chart at 1916, but 1963 is the real resistance level that we'd be looking to achieve. Again, this is a bit of an impulsive move, but potentially we are seeing a short-term top. And again, the stronger dollar last week sort of impacted on gold. So slightly negative on the gold side of things. We did talk about this. This is a 4-hour chart. This head and shoulders formation, and we saw the sort of reaction back to the break of the neckline, and that played out really nicely, and we're on the back foot this morning. I think on the intraday trade idea we're looking to sell around 1890, so I sort of agree with that. So I think potential for a little bit more unwinding from the longs. On the indices, we see, let's look at the weekly chart. Obviously we were talking about the hanging men candles, and that they seem to have sort of like although they're still controlling the the current market price action, we saw a decent week last week, bullish engulfing candle, and we're off to a sort of a slightly firm start this morning. Again, with the sort of like the commodities or the oil impact on FTSE 100, that's buoyant as oil prices are around the all-time highs. New all-time highs in DAX. Again, on the weekly chart, we're sort of in this expanding wedge formation, which is been going on for a long while now and will continue. But we do have, it does look like a little bit of a top, but breaking above it at the moment. So you just got to go with the flow. It's not worth fighting. But any sort of like short-term reversal signals on the 4-hour charts or the hourly chart may be worth a small punt. But 15,500 for me is the supportive area. We had numerous tests of this resistance previously, so that now becomes a major support level. Let's turn it to blue, so that makes it a little bit clearer. On the upside, new highs, blue skies. There's nothing really sort of slowing it down the upside. Obviously, the momentum is slowing down a little bit, so that warns of a potential topping formation. But as I say, I wouldn't sort of like risk too much on that idea. The US indices are just off their all-time highs, but looking pretty positive at the moment. And as Joe said, the meme stocks having a little bit of an influence on that bullish sentiment, really, I suppose we could call it. NASDAQ, so the tech sector, took a bit of a hit towards the end of last week, but fought back and has opened and has sort of maintained those highs currently, although we are seeing on the 4-hour chart a few little toppy signals, but nothing really to be too concerned about yet. I think if we get a break of 13,700 on the NASDAQ, then maybe we'll get some more selling coming in, and above, I think a break of 13,785 opens up a move for another 75 points to 13,846, which is our next resistance level in there. Similar sort of chart formation on the S&Ps, although potentially early signs, really early signs of potential double top formation. We'd need to see a break of this neckline here, 4,166, for that to be confirmed. That would then lead to a measured move target of the high to the neckline. So that moved a measured move target down to 4,100. So that's a short-term play on the 4-hour chart. Above the, if we manage to break above these highs, next resistance, let's turn it to red. Next resistance comes in at 4,245, the all-time high. Aussie 200 continuing higher, obviously backed by the commodity firmness. China 50 looks a little bit like a bullish flag formation. Looks pretty nice, really. Obviously, a break higher would see that extended move. Obviously, we had the inverse head and shoulders formation, which has played out and reached its measured move target. So that's done. But we've obviously got this bullish flag formation. So that's looking for potential for Chinese 50 to sort of like break here. Let's get a measured move target. Not exactly there. Measured move target somewhere around about the all-time highs, around about 20,000 if we do break above this channel. Still a bit of a way to go. We're on the back foot at the moment, and obviously this could, you know, quite easily fail. And if it does fail, obviously we've got these sort of highs that it's tried to break through on this channel, that would sort of like turn into some sort of triple top formation. So definitely one to watch this week. Hang Seng a little bit under pressure this morning. Bit of a head and shoulders formation here that just springs to mind something like this: left shoulder, neckline, head, neckline, right shoulder, potential for a reversal there. So for me, 28,900 would be the level we could see a pullback to, and potential for a sell opportunity there with your stop maybe just above the right shoulder. So that's it on the indices. Cryptocurrencies, let's take a look at Bitcoin bashing. That I've redrawn this triangle chart on the 4-hour. It was oops, let's get it here. It was a bit like this, broke out to the upside, failed, then broke out to the downside, and it's held actually. But I've redrawn it just to take into account these highs on the 4-hour chart. We're still in a triangle formation, so still have to wait and see where we are going to break from here. Has to have a decent break. At the moment, we've got a little bit of a reaction higher from the low of 34,830. But it hasn't rallied too much. So for me, Bitcoin and cryptocurrency still feel a little bit under pressure. I still think that all of them are worth nothing, and that it will reach zero very, very soon.
What a way to sign off.
Just thought if no one was listening, I just want to see their reaction if they were.
Yeah, okay, fair enough. You're certainly going to rile a few people with that.
Yeah, exactly. I think that's the thing. I was speaking to someone last week, and I said that every time I sort of like say anything slightly negative, even on a technical front, even on a short-term front, it seems to create a bit of a reaction, because obviously most people out there are holding cryptocurrencies very wishfully. But there is, we've got to see a major washout to the downside before any of these cryptocurrencies step up to the plate and become our currency of the future, because one or two of them definitely will.
Okay, well, I'm going to change the title of this video to Steve Says Bitcoin's, so all cryptos are worth nothing.
Yeah, exactly. And I might get the, who is it that sort of like had a go at Elon Musk at the weekend? You know, the guys with masks that sort of like release videos warning you not to mess about with anyone. Oh, I can't remember the name. They released a video this week just warning Elon Musk that he's got to stop. Obviously, they're long of cryptos. He's got to stop.
Only say good things about them.
Yeah, it's the sort of the conspiracy theorists. I'm sure they'll be on to me next. Hang on, who's that?
Anonymous. Was it Anonymous?
Anonymous. That's it. Yeah.
Brilliant. Okay, right. So thanks for that very good roundup on the chart, Steve. Let's have a quick look at what's going on the FX side of things. So first up, dollar index, real sort of indecision and chop across the board, really. And I think obviously a lot of that is down to what happened on Friday with the non-farm numbers. So this is dollar index. We had this corrective channel that's been playing out for a number of weeks. We saw a couple of attempts at breaking out above the upper band, but all of which failed until we finally got an open outside of the channel, and then a real strong push to the upside, a real big impulsive move higher. Then we gave pretty much most of that back the next session. We're not doing a lot today. So quite interesting. If we look at what happened with euro dollar, we saw a break of this corrective channel. We saw the open outside of the channel. We saw a close at new lows below the low of this candle here from the 28th of May. But then we saw a decent bounce back to the upside. Are we going to see more downside, or are we just going to see a complete recovery and a move back up to retest the underside of this channel? I'm not too sure, to be honest. It looks really choppy and hard to call. If we look at what's going on with cable, quite choppy here, failed at this resistance level at 142.41, and looks as though it's going to continue to chop around here for the time being, looking really for a pullback down to this kind of level, which is at 139.85. We've got an unfilled gap, and we've also got the uptrend line emerging there as well. So, a nice sort of confluence of levels to potentially target there for a short-term correction. What else do we look at? So, dollar CAD, getting some signals here, potentially an engulfing candle that had formed last week, but then we gave some back. Unless we can get above this resistance here at 121.44, then I can't see anything happening there in the very short term. If anything, we're just going to see a continuation around here and prices chop around these levels. Looking at New Zealand dollar, US dollar, this was quite interesting. Obviously, New Zealand dollar typically a riskier asset, but if we were forming a bit of a, I don't know, potentially a consolidation pattern or a continuation pattern, but we broke down below that, closing below the support line. we've got back into that level over the last couple of sessions, but whether or not we hold or whether this is just another chance to sell, we'll have to wait and see. But it's all pretty choppy, really, and quite difficult to call, which has really been the case with FX for quite some time. You know, the clients that we're having a chat with, Steve, they're all saying that FX is making up less and less of their business on these trading platforms. So maybe that's just because the trading opportunities just aren't as good at the minute.
Yeah, definitely. I mean, everything's got to be of interest. If you're going to trade it, you want to have an interest in it. And yeah, I think these things go in cycles. So at the moment, there's other things that are a bit more interesting.
Yeah, I mean, you know, while they're trading up in these uptrends, obviously they're looking really nice and nice to trade. But then when you go through these chop phases that we're in now, there's just nothing going on, really. It's just, you know, you're going to keep getting stopped out after stop out. So not much else to really say on the FX side of things. They're all in sort of consolidations, really, in anything that's a major interest. So we'll have to just wait and see what happens and how things play out over the coming days and weeks.
Yeah, definitely.
Okay, so gun to the head challenge. Obviously, I was off on Friday, but Steve carried it on and went short of DAX, I believe.
Yeah, I didn't get.
You were unlucky with that.
Yeah,
I didn't have you stopped out on my
no,
chart.
it didn't get stopped. I don't know where it closed, but it didn't get stopped.
You were 10 ticks on side.
Oh, all right. Well, that's
but it did,
the day before.
It did get pretty close, didn't it, to target, actually, your DAX call, but then obviously rallied back the other way.
Yeah.
But you had a tight trade on the day before on Bitcoin.
Yeah.
Which unfortunately was stopped, but it's not really doing a bit choppy as well, isn't it? So what do you fancy today? Anything that's caught your eye this morning?
Well, I mean, I'm a gold bull. I do think gold is going higher in the longer term, but I do feel we're maybe just a bit ahead of ourselves at the moment and needs to have some sort of correction lower. But every time I do sort of like put a short on, I seem to get stopped out very, very quickly. But I'm going to go for it again today. I think this sort of like the 1895, 97 area is a good level to place a stop. So getting short at 1884 spot 18, and maybe have a stop around about $12, and so I'll target a move to $36 on the downside, down to 1848.18, which in fact it is one of my support levels. That comes in at 1845.46, this previous swing high, which has broke through and now provides support. So yeah, I'm going to go for that. Yeah, getting short, stop at close to the swing high from Friday, and looking for a move lower, trying to take out last week's low.
Cool. I'm going to take a look at dollar CAD. This is the daily chart, and as I just said in my roundup, there isn't a lot going on with FX, and this is sort of pretty a good example of that. It's trading within this range, as you can see here, upper end at the blue line, lower end at the red. It's kind of in the middle or sort of closer towards the upper end. But what caught my eye this morning was on the hourly chart. If we just have a zoom in on this range, as you can see, that's the range I just highlighted. But we had a decent rally over the last few hours into a resistance level here. We've got this big impulsive candle that was posted at 1 o'clock on Friday. We've rallied into roughly 50% of that and failed, posting this sort of reversal candle that you can see over the past hour. So I'm going to sell it here at 120.94. Stop loss at 121.10, which is very tight, 17 ticks. Targeting a move down to this lower end of the channel, which 80 ticks lower. So looking for 4.84R on dollar CAD today, trying to make the most of the fact that these currencies are pretty range bound and trying to stick within the range. Let's see. Nothing really on the old calendar today. So from a macro perspective, there's not a lot that's going to provide any kind of catalysts. So that's pretty much it from us, I think, Steve. I don't think there's any more that we can add today.
No, I don't think there is. Thomas has just given us a few little Musk-esque tweet, sort of like symbols, diamond hands, diamonds. I can't work out what the last one in roller skates or something. It's sort of like saying, hold on to your cryptocurrencies. Probably the right thing to do, Thomas. We're just technical analysts. What do we know?
No, exactly. Okay, cool. Right, well, let's wrap up then, Steve. Thanks very much for your roundups, and we will be back tomorrow morning.
Cheers, guys. Have a good day.